Hello, good morning, ladies and gentlemen. Welcome to another new week, and I'm so excited to be here with you this morning. So let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this started. Okay, so I would like to see some comments, please. If you can see my screen and you can hear my voice, let's know that we are good to go. Type hi in the comment section, and this will give me a confirmation that things are quite all right. So let's see what we have here. Okay, 815, good morning to you. Thank you very much. PKLS, good morning to you. Valdemiro, good morning. Thank you very much for that confirmation. Lala, all right. Hey, Carrie, good morning to you. Thank you very much. All right, so let's take this as a confirmation and that things are quite all right at this point. So on this note, I welcome you all to yet another promising session on the X-Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters and identifying recurring trends, support and resistance level to gain insight into the current market structure. And by the end of the session, you will have digested data that will eventually aid you in making a well-informed but independent trading decision during the New York session. And for those who are joining us for the first time, you are highly welcome on board. And one thing we normally do here is to gather here as a community to get prepared for the New York session. And today, like this, Mondays, we always pick on random pairs, which we are going to be monitoring through the course of the week. So if you have any instrument you want us to look at, be it cryptocurrency, options, currency pairs, commodities, feel free to drop them in the comment section. And trust me, I will be incorporating it into our plans for this week. So with that being said here, let's dive right into the business. And you know how we do it. The first thing we want to be doing is to check the economic calendar so that we can keep tabs with the fundamental aspect of the market. And one more thing I would like to inform us here, that the week has started on a very interesting note, as we got an announcement from the US president during the course of the weekend that the much anticipated US debt ceiling negotiation has finally reached a positive conclusion. So as a result of this, we are going to be looking forward to see how the market is going to be reacting to this event. And mind you, the US is observing a public holiday today. I think it's the Memorial Day, they call it. So they're having a public holiday today, and this might likely incite some choppy situation in the market. So the market might be a little bit slow today. So we should take note of this holiday too while we monitor price action. So for this week, we have a handful, I think 3 high impact events that we are going to be looking forward to that is going to be affecting the instruments on our watch list. And hold on a second. Let me make things a little bit bolder so that we can see things clearly here. So the first high impact event isn't coming until Thursday, and that is the ADP employment change. Then we have the ISM manufacturing PMI, and then on Friday we have the almighty non-farm payroll. So we are not having any high impact event until the second half of this week. So we are likely going to be seeing some choppy situation go on during the first half in anticipation of this event, and definitely we are going to be looking at how we are going to be positioning ourselves ahead of this event. So the first thing we are going to be doing here is to deliberate on the US oil spot. And in that regard, let's scale up into the 4 hours time frame, where have been able to identify a simple setup that I think we can use to guide our trading activity for this week. Now, the first thing I did on the US All Spot was to take into consideration trading activity since the beginning of last month, that is April. And it's quite obvious that price action has been bearish. And in order to affirm the bearish momentum we have in this market, you will see that we have a bearish trend line after connecting the series of lower highs. And something interesting happened during the course of last week's trading session, which I will be explaining to you in a moment. But before I do that, I want to emphasize here that since the beginning of this month, we have seen how buyers have been trying as much as possible to negate every attempt by the sellers to find lower lows. And as a result of this, you will see that since the beginning of this month, you will see that price action has been finding higher lows within this channel to give us an insight into the struggle that the buyers are going through at this point. Now, talking about last week's trading session, we saw how the $71 level became a new platform for buying opportunity, and this led into the first breakout of that trend line we identified earlier. So we saw the breakout of this trend line last week Tuesday to give us a bullish signal. And from the look of things right here, price action appeared to be transitioning into our technical expectation, where whenever we sight price action breaking out of a key structure, we expect it to come back and retest that trend line to incite another wave of bullish momentum. And if you look at this closely, as soon as price action got into the trend line here, we saw bullish candles come in to push price to the upside. And one interesting thing about this structure here is the fact that we have a beautiful confluence here where the trend line, the bearish trend line, the bullish trend line, and the demand zone at the $71 area all meet at one point. And since the meeting happened, we've seen price action continue to find higher highs in this market. And during the end of last week's trading session, we saw our price action closed just right below that $73 area, which happens to be our key level for this week. And so since we already have a key level right now at the $73 area, we want to see how price action is going to react to that key level to determine what our next line of action will be. So we are going to be scaling down into the lower time frame in a moment to see how this level has been, how participants in this market has been trading with the structure. Then one more thing I would like to state here is that we have the $74 area and the $73 level serving as a very strong selling niche since the beginning of the week. So we want to take that into consideration while we continue to monitor price action here. As we can see, every attempt by the buyers to break out of the zone has been met with strong resistance from the sellers. So we are going to be very careful around that area. Even if we are going to be buying above that structure, we want to ensure that we move our stop losses accordingly to secure the positions, as we never can tell sell pressure could come in anytime soon. So with that information we have here on the 4 hours time frame, let's scale down into the 1 hour time frame. Now on the 1 hour time frame, I have a sell position triggered already, so I will be sharing with you why and how we sold at that point, and let's see if you can also be part of this opportunity. So since the beginning of the week, the first thing that is observed here is that the market opened on with a bullish gap, a 40-cent bullish gap here. So this was where price action closed last week, somewhere around the $72.80 level. That was where price action closed. And one thing we saw here is that there was trading activity during the course of the weekend, making price action to start the new week just right above our key level at the $73 area. And one thing we observe here since the beginning of the week is the fact that price action has been ranging between the $73.55 and the $73.05 area to emphasize the level of indecision in this market at the beginning of the week. And you all know how we do it whenever we identify a simple flat channel like this. We want to wait patiently for price action to give us a signal, which will either come in the form of a breakout of the $73.55 level or the breakdown of the $73 area to give us an opportunity to trade. And with a buy stop and sell stop order placed at both ends, we have already a sell stop order triggered just right below the $73 area. If you are taking advantage of that move, well done to you for being on standby to catch that move, as you will currently be running with about 50 pips in profit at this point. And if you have a sell position running at the breakdown of the $3 area, it is high time that you moved your stop loss accordingly to lock in some profit. So you want to move your stop loss to the break even, as we never can tell, price could still come back to retest that structure. Now, for those who had missed out on this opportunity, let's see how we intend to take advantage of a potential trend continuation to the downside. So what we are going to be looking at here, we don't want to jump onto in front of a moving train at this point. We want to remain patient and wait for new structures to mature before we want to join any move. So we could have price action come back to retest either the trend line or the $73.05 level, followed by selling pressure below the structure to give us an opportunity to join the decline to the downside. So if you had missed out on that opportunity, let's wait and see if price will come back to retest the structure that was broken to give us a opportunity to join the bearish move to the downside. So this is how we are going to be taking advantage of any selling opportunity in this market. Then another thing that could happen here, just in case price does not come back into that structure, but instead finds a choppy situation around that $72.40 area, something like this, where it continues to range within that area, then if this happens, then excuse me please. So if this happens and we start seeing this kind of choppy situations, you know how we do it. We want to wait for price action to break down, retest the structure to give us an opportunity to sell. Excuse me please. To sell. So that is how we are going to be selling from this current structure. So let's wait for structures to mature around this area. Now, there is a caveat to this bearish momentum here, that is, if price action continues to drop to the downside. Remember that we identified a bullish trend line on the 4 hours time frame earlier, and this is the bullish trend line here. Let me highlight it so that we can all be on the same page here. So we have the bullish trend line here, which has been supporting the bullish momentum since the beginning of this month. So if the bearish momentum continues to the downside, as soon as price action gets into that trend line area, we want to be moving all stop losses to secure some position, to secure some profits, while we wait out and see how price action will be reacting to that trend line. Now, it now depends on what happens there that will determine if we are going to be adding more sell position. That is, if price action breaks down the trend line, retest that structure, then we want to be looking out for more opportunities to add position to our existing trade. But if price action gets into the trend line and instead of breaking down the trend line, we begin to see buy pressure resume around that area, then we would have no choice than to look out for buying opportunity at the breakout of structure. So this is how we are going to be trading if price action remains below that key level at the $73 area. And in addition to the structure we identified earlier, we have a trend line which has been supporting this bullish momentum since the beginning of since Friday of last week. Hold on a second. So we have this trend line here which has been supporting the bullish momentum since Friday, which already has been broken to the downside, which signaled this bearish momentum we are witnessing in the last 1 hour. So if this trend line is going to be one of the our yardstick to guide trading activity, at least for the first half of this week. So as long as price action remains below that trend line, we'll continue to look out for more selling opportunities in this market. So I've said here that we might likely see price come back to retest the structure. So you want to be part of a bearish move. But if it so happens that price action climbs up and climbs back above that trend line, then buying pressure above the trend line here will give us a sign that buyers have finally come back into this market. Hence, this whole breakdown here will turn out to be a false breakdown. So if this happens, then we want to be looking out for buying opportunities above the trend line and also have a buy stop order above the $73.55 level to be part of a bullish momentum to the upside. And if price action continues in such a way that it breaks out of that $74 level, which happens to be a strong selling niche since the beginning of this month, which we deliberated on the 4 hours time frame, then we want to be looking out for more opportunities to buy the US oil spot. So let's see how this plays out in the next couple of hours. And with the information we have here, we will be able to manage this position very well. So let's mark this out on our chart. You might want to screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your independent decision on this commodity. If you have any questions regarding what I just explained and you need me to shed more light in any aspects of what I discussed, feel free to let me know in the comment section. All right, so in the absence of no questions, I want to assume that we're on the same page. So I will be moving on to the next option, which is the USTech100. So on the USTech100, we want to first of all take an holistic view of what is really going on in this market. Now, I want to focus on trading activities since the beginning of the year. And what we saw on the daily time frame is the fact that price action has been bullish since the beginning of the year. And to emphasize the strength of buyers here, you will see that price action has been trading within a range, an ascending channel, further emphasized the level of buying pressure in this market. Now, with this situation here, last week we saw a bullish momentum which led into an engulfing candle that we saw. Hold on a second, let me extend this out a little bit. And since then, price action has been finding higher highs. Then we also saw how price action broke out of a key structure here, had a 13,800. So at this point in time, if you had actually missed out on this bullish momentum that broke out of this 15,800, definitely you want to hold on at this point to wait for new structures to mature. So right now, our center of focus for this week is going to be around that 14,400 level, just around this area, as we want to see how price action will be reacting to that level. So if we start seeing a reversal pattern there, then we might want to start getting ready for a retracement back into structure in anticipation of another wave of bullish momentum. But if we see price action transition into a trend continuation pattern around that area, then definitely we want to be having our buy stop order at the resistance line of that pattern to join a trend continuation to the upside. So in that regard, I've been able to identify a simple setup on the 4 hours time frame, which we are going to be using to guide our trading activity today. So right here on the 4 hours time frame, this was what I was able to spot. So we have an ascending channel, we have a breakout of a 13,900, and you will agree with me that it's likely that we might have a retracement back into the structure to incite another wave of bullish momentum. It could be back into the 13,900 or back into the resistance line, which was broken here on Friday to incite another wave of bullish momentum. So we want to see how price action will play out around that structure to get us ready for buying opportunity. So what I did here is scaling down into our 1 hour time frame. Let's see how price action has been reacting with this peak here at a 14,400 to decide what our next line of action will be. So when we scale down into the 1 hour time frame, this was what I was able to spot. So since the beginning of the week, we have seen a situation here where price action has been choppy. So this is where our center of focus is going to be for this week. So anything that happens around this area will determine if we are going to be buying or selling. And you know how we do it. Whenever price action is trapped within a range just like this, we want to wait patiently for price action to give us a signal, which is going to come in the form of either a breakout of the resistance line for buying opportunity or a breakdown of the support line here for selling opportunities. Now let's look at the potentials of the buyers here. So this situation we have here, if we consider the impulsive move that brought us to this point, you would agree with me that placing a buy stop order above the $14,415 level seems most reasonable to join a trend continuation to the upside, as if we do have a breakout of that structure, there is a high chance that price action will continue to the upside. And if it does that, we want to have our stop losses anywhere around the 13,350 and the 13,360, which will be dovetailing to approximately 50 pips stop loss. And let's see how far that bullish momentum will go. So anywhere above the $14,415 level seems most appropriate to look out for buying opportunity on the USTech100. However, if the opposite happens here and price action drops below the support line here at the $14,350 area, a retest of structure will be giving us a confirmation that price action will be going through a retracement phase. And if we consider the impulsive move that brought us to this point, we have structures to look out for that will culminate the retracement phase. So what we are going to be doing here to project a TP target if price action breaks down the support line at the 14,350 is to use our Fibonacci retracement tool, and let's aim at an area. I think this is where the bullish trend line started. The bullish momentum started rather. So we are going to be aiming at that area between the 50 and the 78.6% of the previous impulse leg as a yardstick to guide our TP target for any sell momentum here. So we have a potential TP target for sellers. Let me put it that way to make things clearer. For sellers. And then we also have that area serve as a potential demand zone if we start seeing buy pressure resume around that area. So I would like to place this right inside that box. Okay, so whenever you screenshot my screen, you have it marked out on your chart. So if price breaks down the 14,350, then we want to be looking for our TP target between the 14,200 and the $14,000 area. So this gives us a minimum of about 160 pips to a maximum of about 300 pips to catch here if we do have a retracement to the downside. And one thing about this structure is that it also shares a confluence with our trend line, the resistance line of that ascending channel we identified on the 4 hours time frame, where depending on how price action reacts to the structure will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So let's keep this in mind. Mark this out on your chart. Our center of focus right now is that range between the 14,415 and the 14,350, where depending on how price action reacts to both the resistance line and the support line will determine if we are going to be buying or selling the USTech100 for this week. So that is that on the USTech100. If you have questions, feel free to let me know right in the comment section. So in the absence of no questions, I want to assume we're on the same page. So I will be moving on to the next instrument. And the next instrument we are going to be looking at right here is the GBPUSD. And before we go into the details here of what our plans are for today, let's run through the 4 hours time frame where I was able to identify a setup that we are going to be using to guide our trading activity for this week. Now, what I did here on the 4 hours time frame was to consider trading activity since the beginning of this month. And if you do that correctly, you will see that price action has been bearish so far this month. And to further emphasize the strength of the sellers here, I was able to connect a series of lower highs to give me this bearish trend line you can see on your screen right now. And in fact, this trend line is going to be one of the yardstick that will be guiding our trading activity for this week. Now, if we zoom into what has been happening in the last 1 week in this market, the first structure we have here is the 1.23750, which you can see here. And one thing that makes this level important and part of my plans for this week is the fact that we saw price action break down that structure during the second half of last week. And since the breakdown of that structure happened, we saw how that level had continued to be a strong selling niche, where buyers were finding it difficult to break out of that level. And one more thing about that 1.23750 here is the fact that it also shares a confluence with that bearish trend line. Now, one interesting thing happened here. Despite the multiple rejection of that 1.23750 by the sellers last week, one thing we saw here was that price action, as soon as it got into the 1.23100 area, we saw our buy pressure resumed from that area, hereby negating the attempt by the sellers to break down that structure. And this led into a choppy situation where price action at this moment is caught within a range between the 123.750 and the 123.100. So with this kind of situation here, you would agree with me that we are at a critical point in the market where anything could actually happen. A breakout of the resistance line at the 1.23750 could signal a reversal pattern, where the breakout of that resistance line would also have broken out of that bearish trend line to signal that the trend line may no longer have the capacity to negate the bullish momentum anymore. And this will definitely be a sign that we are in for a reversal pattern. And to further buttress the potential of a reversal pattern from the structure is this impulsive move I saw here last week that broke down that 1.23750, and you saw here that when price got into the 1.231, we saw buy pressure bringing price back into the structure. And since then, price is yet to find the momentum to break down the previous low, hereby giving us a higher low. And whenever we sight a higher low like this, it's a clear sign that a bullish momentum is gradually building up behind the scenes. And if this continues like this, bringing price back into the 1.23750 this week, we might likely be seeing a reversal pattern in the form of a double bottom structure. And you know how we do it whenever we identify a potential double bottom structure. We want to quickly identify a neckline which we shall be using to guide our trading activity. So the neckline will serve as a platform that will validate this reversal pattern. So if a breakout of the neckline happens, then definitely we want to get ready to buy. And coincidentally, the neckline for that reversal pattern falls exactly along the 1.23750 area here, which shares a confluence with the bearish trend line. So a breakout of that level definitely will be welcome in a buy position here. So I want to see price action breakout of the 1.23750, and if possible, retest of structure on my lower time frame will give me the privilege to add more position to my existing trade. So anywhere above the 1.23750 is looking very promising to buy the GBPUSD for this week. However, if price action continues to the downside, that is continues to find lower highs here. And considering the fact that price action has been bearish since the beginning of this month, we cannot ignore the potentials that the sellers could still come in at any point. Now, from this current structure, what do we want to see on this chart that will give us the confirmation that it is now a good time for us to sell the GBPUSD? Well, what I want to see here is price action breaking down the 1.231. Remember, this level had been negating sellers' attempt here since last week Thursday. And for me to sell at this point, I would rather see price action take out all the buy positions there to give me a signal that a bearish momentum, that the sellers are still very strong in this market. So a breakdown retest of the structure will give us an opportunity to add more position. So it could come in such a way that price comes back to retest the 1.23400 area, which also would share a confluence with the bearish trend line to incite another opportunity to sell the GBPUSD for this week. So as long as price action breaks down the 1.231, we'll look out for selling opportunities. Retest of structures give us further confirmations that sellers are still strong in this market. But the only area we are going to be buying is if price action breaks out of the 1.23750. Now, in order to position ourselves at a very right angle so that we can join a move at this point, let's scale down to the 1 hour time frame and let's see how participants in this market has been reacting to this key level at the 1.23400 area. So this is my key level for this week. Depending on how price action reacts to this key level will give me an insight into what is likely going to be happening, at least during the first half of this week. So scaling down into the 1 hour time frame, this is what I was able to come up with. And looking at what has been happening since the early hours of today, you will see that price action has been a little bit choppy since the beginning of this week. And as a result of this, you will see that price action has been ranging between the 1.23580 and the 1.23400 area, which happens to be our key level since the beginning of the week, to give us an insight into the level of indecision in this market. Now, coupled with the fact that price action still remains above our key level, it's looking a little bit bullish at this point. But if we are going to be buying, we need a significant confirmation for us to join a bullish momentum. And one thing you will notice here in the last 4 to 5 hours, we saw price action break out of that resistant line at the 1.23580. But immediately after the breakout, we saw an engulfing bearish candle taking out all the buy position around that area. But for me, with the breakout of this level, it's a clear sign that we have some buy pressure around that area. So because of the breakout has already happened and price action coming back into the key level to find buy pressure, I want to be having a buy stop order above the 1.2358 level to be part of a bullish momentum to the upside. And if price action continues in such a way that it breaks out of that key level we identified at the 1.23750 on the 4 hours time frame, which I also said shares a confluence with a bearish trend line, because a breakout of that structure would also have broken out of that trend line, will welcome more opportunities in this market to buy the GBPUSD. So for today, we are looking forward to buying opportunity above the 1.23580, and as long as price remains above that structure, we continue to look out for more opportunities to buy. And to further help us make things a little bit easy for us to spot trading opportunities today, I was able to connect the series of higher lows here, giving us this bullish trend line on your screen, which we are also going to be using to guide our trading activity. So as long as price action remains above that trend line, we feel comfortable in our buy position. So like I said, we are waiting for a buy opportunity above the structure, so we could see price continue to trade above this level. We feel comfortable in our buy position and continue to ride the momentum all the way to the upside by adding more position. But if at any point in time during the New York session today we cite a breakdown of the trend line, that is price action breaches the trend line to the downside, then at this point we want to have a bearish signal considered. And if a breakdown of the trend line happens, price action would have also broken down the key level at the 1.2340 area. Then we wait for price action to give us a confirmation on our lower time frame, retest of structure, continued selling pressure, then we can join the decline to the downside. Then a further breakdown of the 1.23100 level will be welcoming more position to our existing sell position in this market. So this is how we are going to be anticipating a potential trading opportunity today. So we have a critical structure at this point where price action still ranges between this area. So a breakout or breakdown of this range will be giving us an opportunity to buy or sell. And please mark this out on your charts, this trend line, as it's going to go a long way in helping us to feel comfortable in whatever position we are in. As if price remains above that structure, we feel comfortable buying, and if price breaks the level to the trend line to the downside, we get ready to sell the GBPUSD at that point. So let's keep this in mind. If you have any questions, let me know in the comment section. So moving on right now, I'm going to be moving on into the XAUUSD, which is going to be the next commodity we are going to be looking at. And in that regard, let's scale up into the 4 hours time frame. So right here on the 4 hours time frame, let's look at things from an holistic point of view. And what I saw here, if you look at the structure, you will see that it's looking a little bit similar to what we had on the GBPUSD, and it just shows a clear sign that the dollar is gaining a whole lot of traction as a result of the positive economic data that came in last week, and coupled with the fact that we are having a positive signal as regards the US debt ceiling negotiation. Since the beginning of this month, price action has been bearish actually, and to emphasize the level of bearish momentum here, I was able to connect a series of lower highs to give us a bearish trend line. And in fact, I have a couple of trend lines here, but the trend line we are going to be using to guide our trading activity for this week is the thick one, the thick red one on your screen, which I'm highlighting right now. This is what we are going to be using to guide our trading activity for this week. Now, if we zoom into the current structure that is taking into consideration trading activity in this market in the last couple of weeks, you will see that I have a couple of key levels which we are going to be using to guide our trading activity. Now, the first one here is this range between the 1,980, it's a $20 range, and the 1,960, where we saw price action was caught within that structure, which emphasized the level of indecision at that point, before we finally saw the breakdown of that key level at the 1,960. So with the breakdown of the structure, the natural thought process here is that we want to be looking out for more selling opportunities, since price action just broke down a very strong demand zone and a key level had the 1,960. And most of the time, from a technical standpoint, we want to see price retest the structure to incite another wave to the downside. However, something interesting happened during the second half of last week following the breakdown of that structure, and that is the fact that as soon as the breakdown happened, we saw that when price action got into the 1,940 zone, we begin to see buy pressure around that area, hereby negating all attempt by the sellers to break down that level. And for me, this might likely be a sign that we could have a reversal pattern unfold anytime soon. And if we consider the impulsive move that brought us to this point, look at this impulsive move, bringing us to this lowest point here. Price action came back into the 1,952, came back again. Price was unable to break the previous low, giving us a higher low at this point. And whenever we have higher lows like this, it's a clear sign that price action might likely be going through building up some bullish momentum behind the scenes. And this might likely transition into a potential reversal pattern, which is not yet formed at this point. It's only when price action breaks out of the neckline of that double bottom structure that we have a confirmed reversal pattern. And as a result of this, I already identified a key level at a neckline at the 1,952, as you can see here, where the only way we are going to be buying the XAUUSD today is to see price action break out of that 1,952 to be part of a bullish momentum to the upside. And in fact, if price action continues in such a way that it breaks above this key level at the 1,960, then at this point I want to feel very comfortable in my buy position, as a breakout of the 1,960 would have brought price back into the buyer's territory in this market. So this is how we are going to be looking out for buying opportunity from this current market structure. However, since price action has been bearish since the beginning of this month, we cannot ignore the potentials the sellers have from this current structure. So in that regard, for us to sell the XAUUSD, we would rather see price action take out all the buy positions around the 1,940 for a signal to sell. So we want to see price action drop below the structure, and if possible, a retest of structure, which will also share a confluence with that bearish trend line, respecting it one more time to incite another wave of bearish momentum to the downside. So we are not going to be selling the XAUUSD unless price action breaks down the 1,940. So now that we have this information figured out on the 4 hours time frame, let's scale down into the 1 hour time frame so that we can see how participants in this market has been reacting to this current structure that we have around that 1,940. Now, scaling down into the 1 hour time frame, we'll begin to see things more clearly, as I was able to identify a simple setup here after monitoring how the participants in this market has been reacting to this current structure. And this was what I was able to spot here this morning. We saw price action still ranging between the 1,947 and the 1,940, which is a demand zone actually. And one interesting thing about this range is that as soon as price action got into that demand zone at the 1,940, we saw sharp rejections of this level, giving us an insight into the buyer's presence at this particular point in time. And if you look at this candle here during the early hours of today, we saw this sharp rejection, and a couple of hours ago we saw another sharp rejection from this area, further emphasizing the level of buying strength around this area. So for me to buy the XAUUSD, I want to see price action break out of the resistance line here at the 1,947. And remember, I said on the 4 hours time frame that if price action breaks out of the 1,947, we already have a breakout of the bearish trend line, which is a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt in this market. So we are having a buy stop order above the 1,947 to trigger an opportunity to buy the XAUUSD. And if price action continues to the upside, we also have structures at the 1,952 to welcome more opportunities to be part of a trend continuation to the upside. And while I said on the 4 hours time frame that if price action goes on to break out of the 1,960, then we are back at the buyer's territory, and at this point we will be very, very confident that buyers is going to be taking over for this week. So let's see how price action plays out if it so happens that it breaks out of the 1,947. Now, besides this whole situation here, I mentioned earlier that the only reason why we are going to be selling the XAUUSD is only if price action takes out all the buy positions within that demand zone we have at the 1,940 zone here. So we want to see price action take out all the buy positions to give us a signal to sell the XAUUSD. And if a breakdown of the 1,940 happen, we are not considering selling the XAUUSD at all for today. So let's keep this in mind. Mark this out on your charts, and let's use the simple setup we have here to position ourselves ahead of the New York session today. So that is that on the XAUUSD. If you have any questions, feel free to let me know right in the comment section. So let's move on to the last pair for today, which we'll be treating, and that is the USDJPY. So let's look at what is happening on the USDJPY from an holistic point of view before we dive into the lower time frame to identify a potential trading opportunity. So on the 4 hours time frame USDJPY chart, this is what I was able to come up with on the USDJPY 4 hours time frame. And what I did here was to consider price action activity since the beginning of this month. And looking at what we have here, it is quite obvious that price action is bullish. Buyers are really strong in this market, finding higher highs and higher lows. And in fact, we have an ascending channel to further buttress how strong the buyers are at this point in time. Another thing that I also want to call our attention to is the fact that within the ascending channel, we have seen a situation here where price action has been trading within the upper half of the ascending channel, which is a sign that buyers are very strong here. As we can see, sellers were unable to break down to the lower half of that ascending channel. And for me at this point, if we zoom into what happened last week, we saw our price action tested the 140.750 level, which happens to be my key level for the week. And another thing about the structure is that it also shares a confluence with the resistant line of that ascending channel. And what we saw after price action tested the resistant line and the 140.750 was that we begin to see some selling pressure resume around that area. And with a selling pressure around that area, we might likely see price action incite a sell-off where price action could drop back into the support line of that descending channel, of the ascending channel rather, giving us about 200 pips maximum here before another wave of bullish momentum will happen. Now, if that is going to be the case, how do we intend to position ourselves ahead of the New York session? So we are going to be looking at how price action has been reacting to the 140.750 since the beginning of the week to decide what our next line of action will be. So to do that, we want to scale down into a much more lower time frame, which is the 1 hour time frame, where I was able to spot a simple setup after monitoring how participants in this market has been reacting to this current structure since the beginning of this week. Now, this was what I was able to come up with around the structure. And looking at what we have here, you will see that this is the 140.750, which I made mention of on the 4 hours time frame. That is our key level. And see what we have here. Price action started the week on a bullish note at the 140.350, and as soon as it broke out of the key level, went to as far as the 140.920, we saw some selling pressure resume around that area, bringing price back into the support line at the beginning of the week, hereby giving us a range to work with. So with the situation we had there, we can see that price action was initially ranging within the 140.920 and the 140.530 before we saw the breakdown of that support line here at the 140.530. And because of this breakdown of that support line, for me, this is seen as a bearish signal. And if you had missed out on that opportunity, the market gave us a second chance as we saw price action come back to retest the structure, and boom, we can see our price action had continued to fall to the downside. And if you are taking advantage of that opportunity, you will currently be running with about 26-25 pips in profit at this point. And if you're still in a sell position right now, kindly move your stop loss to secure this current sell position. And the most appropriate area is just to move it to your break-even zone, to your entry point, and let's see how price action plays out from this current structure. So I'm hoping that this bearish momentum will continue, and if it does continue, a breakdown retest of the 140.230 area will be welcoming more sell position in this market. A further breakdown of the 140 welcomes additional sell position, and let's continue to ride the move all the way to the downside. And one thing I want us to do here is that as we ride the move all the way to the downside, we want to wait and see how price action will be reacting to the structure around the 139.700, which also shares a confluence with that trend line, which is the line that demarcated the upper half of the ascending channel from the lower half of the ascending channel, which we saw on the 4 hours time frame. Let me show you once again so that you can see it clearly. So this is what I'm talking about here. So this is the upper half of the ascending channel and the lower half. So depending on how price action reacts to the structure will determine if we are going to be going to as far as the support line of the ascending channel, or probably another buying opportunity will come if buy pressure resumes above that support line. So that is how we are going to be managing any sell position from this current structure in this market. So you can see here that the bearish momentum here has a tendency of giving us multiple entries. So we want to mark these levels out on our chart so that we can use them to guide more opportunities to take advantage of in this market. So let's see how price action plays out from this current structure going forward. Then one thing I would like to do here is to map out that level along the trend line, which I said is at the 139.900, I guess. Is that what I called it the other time? Let me bring out our line chart and see things more clearly here. So we have it at the 139.700. So we are going to be looking out for more opportunity if price action breaks down the 139.700 to the downside. So let's mark this out also on our screen. So that is that for selling the USDJPY for today. Now, looking at the situation, considering the impulsive move that started here on Friday, bringing price into the structure, we cannot ignore the potentials of buyers too as well, as the old bearish momentum we are witnessing so far this week could likely be a retracement of that impulsive move, where the appearance of buy pressure at one point in time could be the trigger that will push a bullish trend continuation. Now, if we are going to be anticipating this one, while we are running a sell position at this point, we want to picture or project where the potential culmination of this retracement phase could happen. And to do that, we are going to be using our Fibonacci retracement tool. And what we are going to be doing is running the tool through the previous impulse leg here. And then we aim at an area between the 50 and the 78.6% of the previous impulse leg, which when we do this right here, we have something like this. So I would like to label this area as a potential buy zone, potential demand zone rather. Let me name it that way. I'll give it a green color and then place it right inside the box. Let's make it a little bit bigger, right? Okay, so we have it like this. So we are going to be looking at how the market is going to be reacting to the zone. So at this point in time, it appears price has already tested the 50% retracement. So what we are going to be looking at around this area that will negate this bearish momentum we have been enjoying since the beginning of the week is if we start seeing a reversal pattern unfold. And this could come in the form of a double bottom structure where price action finds higher lows. Then at this point, we want to be getting ready to buy. So if it so happens we have a breakout of the neckline, then we get ready to buy at that point. And another thing that could happen here is price action transitioning into a inverse end and shoulder pattern, something like this, after which we identify the neckline, breakout retest of neckline welcomes more opportunity to to join the bullish momentum to the upside. So this is an area of focus right now. So in as much as we are having a sell position running at this point, we want to be very critical about this level, about this zone rather, between the 140.200 and the 139.800 area to see how price action reacts to that zone, and this will definitely determine if we are going to be adding more sell position to our existing trade or get ready for a bullish momentum from this point. So that is how we are going to be trading the USDJPY for today, and so on this note I want to call it a day here. If you have any questions, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So we were able to treat how many pairs today? The USOILSPOT, the USTech100, the GBPUSD, USDJPY, and the XAUUSD. So we have 5 opportunities as we get prepared for the New York session, and I'm very confident that we are well equipped to be able to take advantage of any of this potential opportunity as we continue to monitor price action. So I wish you best of luck during the New York session today, and please note that there is a public holiday observation today in the US, and the market might be a little bit slow, so don't get too compulsive. The tendency to be very compulsive in our trading is very, very high when the market is slow, so let's remain patient. Let's wait for our structures to mature before we want to jump into any position at this point. And I hope you marked out your charts as we did here. Hope you screenshotted my screen so that you can use them as a reference point when you're about to make your independent decision. So on this note, I wish you best of luck today, and let's see what happens. And trust me, by tomorrow we shall be coming back here again to see how well these pairs have been doing. Do have a wonderful evening, everyone. Bye bye.